The United States of America is literally partnering up with these crypto projects, and one of them in particular has so much potential that I have a setup which I'm planning to take, and I personally think it will be very profitable. If you think that that sounds interesting, make sure to watch until the end of today's update video. I know it said I would go into a detailed video today on Ethereum, but when this breaking news came out, I just couldn't not make a video about the breaking news. But don't worry, at the very end of today's video, I'm still going to be sharing my thoughts on what will happen to Ethereum. So stay tuned, we will cover that. So what is this breaking news that I'm talking about? Well, yesterday we made a show on the Moon Show channel saying that the US government will use crypto. We said that because Howard Lutnick, the Secretary of Commerce, in a cabinet meeting, which was 3 hours long with the president in-house and all the other cabinet members, he said the following. He mentioned that the United States of America is going to start issuing its GDP data statistics on the blockchain because Trump is the crypto president. The primary question of yesterday's show was, okay, if they're going to do that, then which layer ones are they going to be doing it on? Are they going to be using Chainlink, which is a layer 2 on Ethereum? Are they going to be using Auto Finance, who's going to tokenize over 100 different stocks first week of September? What are they going to use? And today we just found out exactly which cryptocurrencies the Department of Commerce, in partnership with the Bureau of Economic Analysis, which layer ones, which layer twos they will be using to put economic data on chain. But first, let's read the official wording from the Secretary, Howard Lutnick. He says, it's only fitting that the Commerce Department and President Donald Trump, the crypto president, publicly release economic statistical data on the blockchain. We are making America's economic truth immutable and globally accessible like never before, cementing our role as the blockchain capital of the world. And everybody has to admit that the 3.3% GDP growth rate is impressive. Guys, Howard Lutnick, if you don't know, he's one of the biggest Bitcoiners in the world. His firm, Cantor Fitzgerald, they purchased like $120 million of Bitcoin ETFs. So these guys are already super bullish on Bitcoin, and now they're going to be putting economic data on chain. Why is this important, and why did it cause this specific token to go up, well, 56% on the past day? And why is it going to cause a token that I'm very bullish on to go back to its prior all-time highs, in my opinion, at $50? Well, let me explain. The current data that we see, economic data that we currently see published by the government, i.e. the CPI data, these are flawed sets of data. So Trueflation states, which is a blockchain-based firm, they state that inflation is at 2.16%, whereas if you go to the government website, they say that CPI data is at 2.7%. Now, the government can decide which basket of goods determine the average year-on-year increase on inflation. Let's say if the Fed, okay, or if there is an internal mandate to keep interest rates at a high level, what do they have to do? They have to show that inflation is high, so they're not going to reduce interest rates if inflation is high. So what they can say is, okay, look, this X commodity like coffee experienced a 20% increase over the past 3 months. Let's add coffee into the basket of goods that determine what inflation is so that we can show that inflation is high as coffee is pumping the average percentage of inflation overall. They can do things like that. They determine the basket of goods that collates the percentages that become the CPI data. They can pick and choose things. So there's a lot of miscalculation that happens in government data. And by putting data on chain, what you're doing is you're creating a verified ledger of where that data is coming from, putting it in the public eye where everybody can access it. And through immutable and trustable data, you're going to have the proper interest rate. You're going to have the proper monetary policy, so on and so forth. So it's actually very important. It's one of the big use cases for blockchain technology. It would be quite interesting if the next step they take is introduce blockchain voting in elections. That would be a massive thing. But so far, this is pretty good. And who is providing? So which layer twos or layer ones? Who are providing the tokenization or the on-chain transfer? Sorry, guys. Of this data? Well, It's two projects. One of them is Chainlink, the other one is Pith Network. So why do you need these layer twos? Why do you need Chainlink? Why do you need Pith? Well, look, you need oracles that are able to collate data off chain and then take that, verify that data, and create a smart contract on the underlying layer one. The issue is because layer ones, they only process information within that layer one. So Ethereum processes information that's on chain on the layer one of Ethereum. It doesn't bring in external data. You need what is called an oracle to verify, collect off chain data, put it onto a smart contract, and then put it onto the EVM. That's what you need. And the Chainlink Oracle works on the layer one of Ethereum, and the Pith Network Oracle works on the layer one of Solana. So these two oracles are going to be tokenizing not just the GDP data, by the way, they're going to be tokenizing the PCE data. That's coming up tomorrow. Tomorrow is going to be volatile. FYI, PC tomorrow, one of the underlying metrics that the US uses to determine the interest rate. They're going to be doing PCE data, and they're going to be doing the real final sales to private domestic purchasers data, and there will be much more in the future. And overall, you can see that Pith Network, being one of those oracles, went up 56% today, but Chainlink is still lagging behind, and that's why I think Chainlink is actually presenting a massive opportunity. I think Chainlink could still potentially see a little bit of a correction here, but as soon as we break above this upper line of resistance on this huge multi-cycle bullish pennant, I think Chainlink is going to go to prior all-time highs. So already have a position over on weeks open on Chainlink, and if you want to be trading, link is in the first link is in the description for weeks, which is where I'm personally trading. I already have a long position open on Chainlink, but I think that there's still a chance we correct a little bit more. So I have a limit order to jump into Chainlink if we correct to $19.5. But in the macro, if you can buy and hold, I think you're going to make very decent money from Chainlink, and I really love this setup. The second one is Pith. That's already up 56%. I think it's overpriced at the moment, so I'm not really going into it. I think Chainlink is presenting the better opportunity. But apart from those oracles will then put those data onto Arbitrum, to Avalanche, to Ethereum, the ones we know, Mantle, Optimism, Sonic. Sorry, guys. I'm still sick, so try and bear with me. Those oracles will publish that data on Arbitrum, Avalanche, Base, so on and so forth. And those underlying layer ones, some of them like Arbitrum, also massively undervalued. So if you're looking for places to be potentially allocating your altcoin portfolio, I would definitely consider checking out Arbitrum. I would definitely be considering checking out AVAX. They're doing great stuff in the RWA space. And look how undervalued it is compared to 2021, where AVAX was doing nothing. Now they have real utility. But they're incredibly, incredibly undervalued. So these would be the projects that I'm considering to buy for altcoin season, because altcoin season is happening. And I think one of the strongest performers is actually going to be Ethereum. And Ethereum, what do I think will happen to Ethereum? Well, in the immediate short term, there is a little bit of a double top forming. And I wouldn't be surprised if Ethereum drops to the 3.9-ish area. That's where a lot of liquidity is forming. Overall, I think we can reach $8,000 in the cycle. We have the bullish pennant. We have the multi-cycle resistance, catch-up trade to play with Bitcoin, so on and so forth. But don't be scared of a dip to 4 to 3.9K before a continuation to the upside. A lot of liquidity is forming on Ethereum between the 3.9 to $4,000 region. And for Bitcoin, a lot of liquidity is piling between $93 and $110,000. A lot of you guys seem to have really liked the video I published yesterday about the 54 simple moving average and the MACD bearish crossover. Well, look, what Benjamin Cohen, the incredible analyst Benjamin Cohen uses, he uses the 50 simple moving average and he uses the bull and bear market support band. So to pay homage and tribute to him, I decided to include the 54 SMA, which I think is a bit better than the 50 SMA, and I decided to include the bull and bear market support band to conduct a little bit of analysis with you, just as a follow-up from yesterday. If you go to the prior 2 Bitcoin halving cycles, or in fact the prior 1 to 3 Bitcoin halving cycles, what you notice is parabolic structures. In these parabolic structures, Bitcoin likes to find support at the bull and bear market support band and continue its parabola to the upside until eventually breaking below the bull and bear market support band, trying to find final support at the 54 simple moving average, getting a push, but then eventually just failing below both of them and beginning the bear market. That's what happened in the cycle of 2011 to 2013. In the following cycle, something very similar happens. The price action breaks above the 54 simple moving average to begin the bull market. You hold the bull and bear market support band, which is made up of a 20-week SMA and a 21-week EMA. You come down to it quite often, find support. You don't really have to come down to the 54 simple moving average here. The bull and bear market support band hold the parabola strong, and you go all the way to $20,000, and then eventually you break below the bull and bear market support band. You get a retest of the 54 simple moving average, just like what you did here in the previous cycle. That's giving you a small push, but very much soon after, you break below both of those moving averages and enter into a bear market. Again, exactly the same as what happened in 2014. In 2019, you break above the 54 simple moving average to begin the bull markets. I'm going to ignore COVID because that was just a massive black swan event. So we're going to discard that price action over there. In the parabola, here, again, just like the first bull market and the second one, you are finding support in the bull bear market support band. That's enough to put you into a parabolic structure. You eventually fail the bull market support band. You test the 54 simple moving average. That gives you one final push to the upside before breaking below both of them and then entering into a bear market. It's the same over and over and over and over again. When we come to the price action now and the current bull market, that is what's important. We are not going to enter a bear market until both of these are flipped bearish. That is the point where we confirm the bear market. The only concerning sign that I'm seeing is a very strong similarity of what happened to Bitcoin in 2021 and what's happening today. You can see, following a retest to the 54 simple moving average, Bitcoin bounces, breaks above the bull and bear right there, comes down to it again, and then sees the final leg to the upside in Q4 of 2021. And then you have two big exhaustion candles, which take you down to the bull and bear market support band right over there. And when you break below it, you come down to the 54 simple. The bull and bear market is basically there. You go up to it, and then you begin the bear market. So I'm seeing quite a lot of similarities from a cycle perspective, from what the price action is doing. And if we do actually end up breaking below this bull and bear market support band, I will very sadly close Bitcoin long positions, open a short, write it down to 92, 93K. Bitcoin will likely see a bounce there. And at that bounce, I will add more to my short positions and begin my planning and preparation for the bear market. So I just wanted to give you the updates on where I stand with the Bitcoin analysis. What does this mean for altcoin season? For altcoin season, I think we can see a little bit of an increase, a rebound on Bitcoin dominance, and then a capitulation. I think altcoin season will happen. It's not going to be on the magnitude as what took place in, let's say, 2020 and 2021, because interest rates were at zero in 2020, 2021. I can demonstrate that to you. So the Fed funds rates probably will have to recreate it. The Fed funds went to zero. So the interest rate was at zero. The dollar was super, super unvaluable. The quantitative easing was massive, and money printing doubled, and that caused our altcoins to 10x. That's not going to happen. We don't have COVID in this cycle. What I think can happen, though, is I think the market cap of altcoins can go up by 70%. And then individual coins like Solana, individual coins like perhaps BNB, Litecoin, AVAX, because they will do really well, but not every single coin is going to go up 50 to 100x. So I don't think we're in that season anymore. But individualistic altcoins, I think, can really perform well. And we'll be talking about more of those altcoins, just like what we did in the beginning of the show, more and more on this channel. So if you want more content like this, then make sure to subscribe and destroy the like button and turn on the notification bell. Guys, I apologize for my voice. I'm still sick, but I try my best to keep making these videos for you. And the final point of analysis that I can share before I end off is actually the Bitcoin inverse head and shoulder in the CME gap. I don't like this test. I don't like this retest. If we're not able to break above this prior resistance and close the CME gap at 16,800, then the alarm bells will sound. So just watch out for that. Guys, thank you so much for watching. Take care, and I'll see you all on the next video very soon. And as always, bye-bye.